Alright, good afternoon and welcome to today's video. So, in today's video, we're going to be reviewing the New York AM session and understanding the inner workings of the day's trading. Alright, so we've been dropping lower for the past 3 weeks, meaning the algorithm is in a sell delivery, seeking sell side liquidity and also imbalances on the sell side. So, for that reason, every imbalances every imbalance that is lacking in sell side delivery will be of interest. So, on that note, we indicated this weekly BC. So, the low of the weekly BC was indicated and the high of the weekly BC was indicated. Now, if you take a look at these imbalances here, these weeks are imbalances, if you can remember. So, we're going to use our fib to get the midpoint of these imbalances because they are too closely put together imbalances. So the eye of it is a gray pool. So you indicate that as the weekly gray pool eye, and the low of it is the weekly gray pool's low. I'm currently indicating this so we can take off the fib and go into what we have for the day's trading, which is the market review for the mini for the S&P, which is this US 500, and US 500 is the CFD for the S&P. So on this note, we go into the market seeking lower prices because the previous weeks have been bearish. So we are following the trend until the trend gives us another reading. So until then, we are following the trend for a bearish, seeking bearishness in price. So going into the 1 hour, so in the 1 hour, we understood that price has been dropping lower, purging buy side liquidity and sweeping out sell side liquidity, meaning we are getting more confirmation of bearishness in price. So the buy side liquidity was purged and price dropped lower. Rebalanced this imbalance, price dropped lower, and on Friday's trading, price rallied higher, pairing this buy side liquidity here. And on Sunday's opening, price opened lower, leaving this imbalance here. And during the London session, we rebalance this volume imbalance with this liquidity void here, which is the new week opening gap. So here you have the new week opening gap low, sorry, the new week opening gap high, which is the close of Friday's trading, and the new week opening gap low, which is the opening of Sunday's trading. So understanding this, during the London session, we consolidated inside of the new week opening gap, and the new week opening gap, the midpoint of it acted as a resistance, resisting price from going higher. Then price dropped lower during London session. And now we understood that the London session generally makes the low or the high of the day. So on that note, we went into the New York session expecting a continuation of this bearish momentum, which is price seeking lower prices, which is the algorithm seeking lower prices. Now, because we've understood that going into the New York session, we are going to be trading the continuation of what went on in the during the London session. So we indicate the midnight opening for London. So here you have the midnight opening for London. So we had the consolidation price rallied higher, traded above the midnight opening price, then dropped lower, left an imbalance here, rebalanced this imbalance where it came to the midnight opening price and then price dropped lower. Now on this note, going into New York session, we're expecting a force rally higher to then capitalize on that force rally for our continuation of for lower prices. Now at 9:30 at 9:30 a.m. during the New York equities open, firstly, price created this sell side liquidity pool here and then price rallied higher. This rally higher, it is going higher to pair up buy stops for smart money sell orders. So this is a false rally. And when we were inside of this chart, we understood that the false rally will be used to bring in buyers at the higher price. So for smart money to be able to enter a trade, they need a counterparty which is directly opposite with their intended move. So price rallied higher, neutralize these early sellers here, which would have placed their stop losses at this point at this swing high here. So here you have buy side liquidity. So price rallied higher to the buy side liquidity at 9:30 opening. Let's make this smaller. Rallied higher to the 9:30 opening, and as you can see from the weekly gray pool we indicated from the weekly time frame, the gray pool is acting as a resistance, resisting price from going higher. This is the higher time frame PDRAs acting as a dominant PDRA, making the narrative of a sell, making the narrative of expecting a sell side delivery of price being solidified. So price rally higher to the gray pool low, that's the weekly gray pool low, then dropped lower. Now we're going to drop to the 1 minute time frame to get a clear view of the inner workings of IPDA. So when price rallied higher, smart money paired their sell side, their sell orders with this smart money, with this resting buy side liquidity here. So sell orders were taken here. So when price dropped lower here, this is a change in the state of delivery from a buy program here to a sell program because we're expecting lower prices, meaning price going for sell side liquidity. We're expecting to ride the delivery of sell side. So when this price dropped lower here with these two down close candles, price changed from its state of delivery from this buy side to this sell side, meaning the last up close candle here, the open of this last up close candle, you draw that out in time. That is your bearish order block. So you have a bearish, you have a bearish order block. So at 9:49, price traded higher again to rebalance this imbalance. Now this is our long term high and this is our long term low. So when price dropped lower, leaving an imbalance. We understand that when an imbalance is left in price action at a future time in price, the algorithm will rebalance this imbalance to make this an efficient price range, meaning from this high to this low, making this an efficient price range when this rally higher to this other block was done. So when price rallied higher, it rebalanced this imbalance and also this imbalance. Price rallied to the other block, to the bearish order block, and then we had one more drop lower. Then price left this imbalance here. So we're watching this imbalance. So that is the high of the imbalance, and this is the low of the imbalance. Now during this time, we're expecting the we're expecting to see the candle bodies close below the midpoint of this imbalance, s- solidifying our bearish narrative. Because for a bearish narrative, you do not want to see the premium PDRAs to be fully filled up. So you have so we have price trading to the midpoint of this, and then the wick traded to the high of this imbalance. This wicks is allowed to trade like this. The candle bodies is telling you the story of the narrative being bearish. So you have the body failing to trade above the midpoint of this imbalance, and we are also above the 930 opening price, meaning this consolidation, this is the consolidation, and then you have a manipulation leg higher. This manipulation leg was used to pair up smart money sell orders. So because we've confirmed that smart money sell orders has been paired, so we are partnering and riding the smart money chain. Let's put it that way. Targeting this low, and remember our John liquidity, which is the weekly BC low, which is this. So this was our John liquidity going into the New York AM session. So now, how to for profit taking purposes, say you sell from this bearish order block and your stop loss is above here, you take your fib and you take the high to the low, and then you look for the standard deviation of negative 1.5, negative 2.5, and negative 3.5. So, and as you can see, we traded to the when price dropped from a premium to a discount, price had to go back to premium because for sell entries, we enter our sell entries from premium PDRAs. So every PDRA above this zero point 0.5 is of a premium PDRA. So price rallied to a premium PDRA, which is this bearish order block, and also this imbalance resting here, coupled with the bearish order block. Price rallied to a premium, then dropped lower, coming for the first target, which is negative 1.5 standard deviation, and also the negative 2.5 standard deviation. As you can see, the low of this candle is resting at 5,637.3, and the standard deviation reading of this negative 2.5 is 5,637.4, which is close, I guess. So that is that for the day's trading. When price came here, we we took out about 70% of our trade position and left the rest to trade lower to negative 2.5 and below, because as our joint liquidity was the weekly BC low, we expect the price to go to the weekly BC low and through it lower for sell side liquidity. All right. So I hope you got something from this video. I'll talk to you in the next video. Good luck and good luck trading.